What is the Emini S&P 500 futures? The Emini S&P 500 futures is actually a stock market index futures contract that's traded on the CME platform. There's a few differences between the futures contract and the normal ETF or normal stock because futures contract has different expiry. The ES futures contract have 4 different expiry: March, June, September, December every year. And it expires on the 3rd Friday of the month. If the 3rd Friday is a non-trading day, expiry will be on the day before, which is Thursday. For the March futures contract, it will expire on the 3rd Friday of the month. And for June, it will be the 3rd Friday of June, and so on. 1 point in ES futures or ES futures option is $50. And for ES futures option, there's different expiry. They have January to December. Every month there is a ES futures option, and within the month, every week there is a futures option. You have the January 1st week, 2nd week, 3rd week, and 4th week. You have to be careful here because the January, February, and the March option will follow the March futures. And the April, May, June will follow the June futures, and so on. We'll take a look at the next diagram for a clearer picture. This is the S&P 500 index. So we have the March futures, June futures, September, December. You will follow very closely to this index, although the March and June futures may have some difference between the price. And we have the January option, February option, and the March option. They will be tagged to the March futures. The April, May, June will be tagged to the June futures, and so on. So if you are selling or buying a January option, on the expiry date, how do you know if the option is in the money or out of the money? You look at the March futures. You do not look at the June or September futures because your January option is tagged to the March futures. Likewise, for the February and the March option, you will be tagged to the March futures. There is a little bit difference on the March option, especially after the 3rd Friday. We'll go to the platform and take a look, and I'll explain this clearer. On the Thinkorswim platform, the symbol for the Emini S&P 500 is actually /ES. By default, I think they will show you only active only, which is the active month. And now the active month is March 17. The futures price is 2264. If you turn it to all, then you can see all the different months. This is the June Emini S&P 500, and this is a September, December, and this one is the March 2018. There's no price yet, so the active one is the current month. And you can see the difference here. The March and the June is slightly lower, and the September and the December is slightly lower. What we are more concerned is if you are selling an option for January, it will be tagged to this March futures contract, and if you are selling an option for April, then you will be tagged to the June contract. The important thing to note is that if you are selling this March 17, which has 71 days to expiry, this is actually the 3rd Friday of March, and you'll be tagged to this March futures contract, 71 days, and the futures contract has 71 days to expiry. The next one, which is still under March 17, but it expires 85 days, which is the end of month option. So that is the end of the March option. If you are selling this option, then this option will be tagged to the June futures contract, because when the March futures contract expire, this option is still running. It may be a little bit confusing, but as you get used to it, you'll know it. Anything that is before the third Friday of the month, then you'll be tagged to the active month contract. Anything that is after that, you'll be tagged to the following futures contract. And like I say, 1 point in ES is $50. So if you happen to buy the futures contract 2264.25 and you sell it at 2265.25, you make $50. Likewise, if you go the other way, you'll lose $50. And for the option, let's take a look at the 1 month option. The 29 days. The current 2264, we'll look at the money option. So 2265 around there, and the put option is going for about 25 point, and the call option is going for about 24 point. If you were to sell the put option for 25 point, then you would receive 25 point multiplied by 50. You'll be receiving $1,250 into your account. But of course, this is at the money option, and the risk is of course higher if the market were to go against you. If you have to look at the out of money option, when the market is at 2264 and you're selling a 30 days option, let's say if you're looking to sell a 2100 put option for 2.2 point, then this will be about $110. And the current market is 2264, and the 2100 is 160 point away from the current market. In the next few video, I'll be explaining about the margin requirement for trading the ES and how to select the strike, price, and which option to sell. If you have any question, you can always send me an email or drop me a message. Thank you.